And I'm about to share my presentation to you guys. Can you guys see the presentation? Just want to make sure. Thumbs up. Maybe someone. You see it? Okay, great. Perfect. Alrighty. So thank you for being here. This is the Veteran Mortgage Advisor class I plan to do weekly, serving those who served. And, of course, I did a class last week, and this is actually stemming from the questions that were asked in the class last week. A lot of people were asking about the joint loans. So that's what we're going to focus on today. I'm not going to get too deep into it, but I'm going to give you a sort of an overview. But before I get started, I want to know, of course, a couple of people on this call, who here wants to empower and serve the veteran? Actually, let me ask you this. Are you doing that right now? Are you currently doing some sort of marketing or campaign or projects or any kind of initiatives in order to serve our veterans? Can you please raise your hand, or at least maybe you can raise your hand or comment in the chat, or you can raise your hand on Zoom as well. Let's minimize this real quick. I don't want that to show up. All right. Okay, good. So another thing I want to ask you is, are you doing a lot of VA loans? Are you pursuing that market? Are you doing everything you can to learn about that market and serving our veterans? And if you are, if you can provide some examples, you can. Alrighty, so I'm going to go ahead and get started in the process, because that is my goal today. My goal is to help you, give you the tools so that you can serve our veterans better, utilizing the VA loan. Now, of course, again, like I said earlier, we're going to focus on the joint loans, because it's a part of the VA guidelines that a lot of people don't realize or understand or even know about. Essentially, it's about being able to have more than one person on the loan, and not both of them are going to be veterans, and or you might have two veterans, but not both of them are married, right? Typically, with a VA loan, if you have a co-borrower, let's say it's a spouse, then of course that's a normal structure, but I'm talking about structures that are beyond that. Okay, so real quick bio. I'm a certified veteran mortgage advisor. I'm a branch manager for the Larry Lee team at Van Dyke Mortgage. I'm a licensed loan officer since 2016, which is 6 years, which is kind of crazy because it felt like it was yesterday. I made the mistake of, when someone asked how long has the wife been in the mortgages, I said about 2-3 years. She's like 5 years. I'm like, wow, it's been that long. So of course I've been in it longer than her. So it kind of went by fast. My side hustle is a social media marketing coach and running my old ad agency, Robots LLC. The reason why I bring that up is because I hope to merge my passions when it comes to mortgages, helping veterans with the VA loan, and social media to spread the word. I'm licensed in 11 states: Arizona, California, Florida, Illinois, Indiana, Louisiana, Michigan, New Hampshire, North Carolina, Tennessee, and Texas. All right. My mission is that I love the mortgage business, but I was fed up with the lack of education and information clients were provided during their application process. So I created a first-time homebuyer coaching class that provides instant access to answers to questions and simple explanations to the mortgage process and how to qualify for mortgage clients, as well as providing one-on-one coaching. Unlike other loan officers, I made my passion to coach first-time homebuyers on the mortgage process, and that makes all the difference, and how I have helped hundreds of people get in the right path to homeownership, and many of them are now homeowners. You remind me of many of the smart, successful, and savvy clients who are now homeowners, because you are taking the right step to the home purchasing process like they did, meaning you're being a part of this class. The home buying process is very confusing to most people, but this is why I am here, to simplify and make sure you are 100% prepared in the home buying process before anybody else. And when I say anybody else, I'm talking about your competition who are also out there competing to make offers on the same homes that you are. My goal is to make you more empowered and more ready so you can make stronger offers. You can be fully underwritten when you're pre-approved, and you can tell them that you can close faster if needed. So again, I'm a certified veteran mortgage advisor. I'm very proud of this. It's one of the things that makes me feel confident in my abilities to help our fellow veterans and our military servicemen and women. And I want to kind of gloss over my why real quick. Of course, my wife and my kids, I call them the Lee boys, specifically Hunter on the left, the little crazy school picture looking face, whatever, and the right, which is pictures of myself and Bruce, because they're both on the spectrum for autism. And I want to be able to provide therapy for them. So my goal is to gain enough resources this year to provide and start that process for them. Also, my other why is, of course, our veterans. When I post on social media, I usually post things that are fun or funny or humorous. I'm not really serious, but this is one of my most serious posts, and it was very, very popular. I got I think thousands of likes and shares and such. But it starts like this: my father was living in Da Nang, Vietnam during the fall of Saigon. My mother lived in Saigon. My father left by helicopter, my mother by boat, which were more than likely U.S. military ships. It was U.S. soldiers who helped them get in the helicopter and on the boat. They met in Hong Kong, China, and if it wasn't for U.S. soldier, my parents may have not survived, met, and had me, and I wouldn't have what I have today. I might not even exist. Those U.S. soldiers, more than likely, are veterans now. So I thank you, vets. I owe you my life, right? So I feel I have a debt of gratitude that I owe to the U.S. military and the veterans. And I just want to do whatever I can to help serve people in that situation. So what is a VA home loan? A VA home loan is a mortgage guaranteed by the U.S. Department of Veteran Affairs and is issued by a private lender such as a bank, credit union, or mortgage company. A lot of people get this confused. They think that the VA actually loans the money. They do not. They guarantee, meaning like they basically say they will cover a portion of the loan if it were to get defaulted on or whatever. So basically, it allows people like myself in the mortgage industry to provide loans knowing that there is some sort of guarantee just in case, right? So again, we're going to talk about joint loans. Joint loans to me is a new thing. I embarrassingly enough, turned someone down a couple years ago, maybe a little bit longer than that, when they told me they want to purchase a home with a girlfriend, right? And they want to have the girlfriend on the loan. And I told them that that is not possible. On the VA loan, you must be married. And again, I am ashamed to realize that I was wrong. The crazy thing is, if you ask most senior loan officers, people who actually know a lot more than me, have been in the business longer than me, they would have agreed with what I did, right? But after I took my certification, I learned about the joint loan, which again, I'm very happy to hear about. It's a product that it's not like it's new, it's not very well known. Okay, and this is straight from Chapter 7 from VA guidelines. A joint loan generally refers to a loan which the veteran and other persons are liable, and the veteran and other obligators own the security. A joint loan is a loan made to the veteran in one or more non-veteran, meaning a non-spouse, right? Or a veteran and one or more veterans, not a spouse, who will not be using their entitlement. So that means there's two veterans. One of them is using their entitlement and the other one is not going to use their entitlement. Or a veteran and the veteran spouse who's also a veteran, and they both want to use their entitlement, which is kind of interesting, right? So like, if one veteran has a certain amount of entitlement and another veteran has a certain amount of entitlement, they can actually combine it. Now it must be split evenly. You cannot take advantage and have one that has a little bit and one has a lot and use the whole thing. It must equal. But the fact that you can combine forces, you can actually possibly purchase more. Or a veteran and one other or more other veterans that are non-spouse. Again, all of which will use their entitlement. Okay. So it's either a veteran and a veteran spouse who are both married and they're both veterans and they want to use their entitlement, or a veteran and a veteran that's a non-spouse who will also use their entitlement. A loan involving a veteran and his or her spouse will not be treated as a joint loan if the spouse is not a veteran, or a veteran who will not be using his or her entitlement, like I said earlier. So what I mean with that is that's like the typical VA loan structure when someone's married with a spouse, right? If they're non-military, well, it's still considered a normal VA loan. It's not a joint loan. And if they say they're married and they're both veterans, but one of them decide not to use an entitlement, or maybe they don't have any entitlement, or whatever, then again, that's a normal VA loan when you have a veteran and their spouse. A loan to a veteran and a fiance who intend to marry prior to loan closing and take title as veteran and spouse will be treated as a loan to a veteran and spouse conditioned upon their marriage and not a joint loan. So I want to make sure people understand that distinction, right? A lot of people, they might be thinking I'm talking about like a regular VA loan when it comes to a veteran and a person they're going to be married to or they are married to. That's, again, a normal or typical VA loan with that structure, but this one is not involving that kind of structure. Okay, so I got a question here and I got a few participants. Let me go ahead and get them in real quick. Let's see here. Let me go into promote the panelist. Okay, and I got a question. Margaret's, I'm in my home office helping out of the house. Okay, all right. So she doesn't have a question. She's just telling me about her attendance, which is cool. Again, I do want to make sure I pause for questions because obviously this class is for you guys. I have a few other slides I want to show you, but I just want to kind of, again, show you what is straight from the VA guidelines, what a joint loan is. Does anyone have questions about what we just went over? Okay, so we will go back to the next slide. So to sum it up, a loan other than a veteran and a spouse, example, veteran and a fiance, or veteran and a relative, or again, a veteran and another veteran, right? It requires prior authorization from the regional loan center, which is, I wouldn't call them the underwriters or anything like that. They are they are a part of the Veteran Affairs, and all they do is review loans and look at loans. And you'll notice on VA guidelines, they don't really tell you what you can't do. They really more like tell you, the way they structure it is like they just tell you what you can't do, but they don't tell you what you can do, right? The reason I'm bringing that up is because there's a chance where you might have a certain structure or a certain situation that makes sense to you, and you can actually submit it to the regional loan center. And even though there might not be any guidelines on it, if it makes sense to them, they actually might approve it and give you some documentation so that you can submit it to the underwriters and have it pass, right? So there's a lot of case by case basis. I wouldn't call it underwriting. I would call it reviewing of loans and structures that you can take advantage of with the regional loan center. So it's a really great resource, but it does require prior authorization. So let's say I have a joint loan. Before I can officially underwrite it and close and fund it, I must get approval from the regional loan center. Again, that's one of those, review that we require. A down payment is going to be required in this case. So of course, when you have a veteran and a spouse, there's no down payment required. It's covered by the VA in terms of they'll guarantee it. So there's 0% down. But if you have a veteran and a non-spouse, then it's going to require a 12.5%, since the veteran has the VA guaranteeing 25% of the loan. So when I say 12.5%, the VA is basically saying if the loan were to default, we'll guarantee 25% of the loan, right? On a joint loan, it's basically two loans. So you got a loan that is, how do I explain this? You have a loan that is the veterans portion and the non-veterans portion, right? The non-veteran portion would have to be responsible for their financial part of the loan. So the guarantee only guarantees half of the amount of the loan, doesn't guarantee the whole thing, right? This also involves the funding fee. The funding fee is, of course, responsible for both parties. But let's say the veteran is disabled and does not have to pay the funding fee because they're exempt, the funding fee still has to be paid for, or a portion of it, like split by the non-veteran, right? So it must be provided in form of either cash or equity. Okay, so those are the kind of nuances when it comes to splitting the loan. Okay, a veteran and a fiance who's intending to get married prior to closing will not be treated as a joint loan, and of course, the title must be held as veteran spouse. And I already kind of talked about this. That's like a typical situation when it comes to veteran and someone that they're married to. The income strength of a non-veteran cannot compensate for income weakness of the veteran. And we actually kind of talked about this in the last class. We were trying to figure out, what does that exactly mean, right? Basically, and I asked this question to a lot of the senior LOs who are also certified veteran mortgage advisors, and someone kind of made a funny comment. They're saying, you can't have a veteran who has a sugar mama, right? Or a sugar daddy. That's basically what it says. You can't have a veteran that has no income, makes nothing, and expects to have the entire mortgage debt to income ratio or the qualification in terms of prepayment be carried by the non-veteran. That's just not how it works, right? It must be at least split. But you can't have a veteran who carries the strength of the non-veteran co-borrower, right? So let's say, for example, a veteran and their boyfriend, the boyfriend doesn't make that much money, but does have income, and it helps enough to kind of get their purchasing power where they want to be, then that's okay for a large portion of the loan to be covered by the veteran. It just can't be the other way around, right? And the last point about this on this slide is joint loans don't allow veterans using their VA loan benefit to escape residency requirements. But others on the loan who aren't using the VA benefits don't have to promise to live in the home. So from what I'm understanding, again, I haven't structured this loan before. This is something new. From what I'm understanding is, let's say you have a joint loan where you have a veteran and a non-veteran co-borrower, and let's say they're not even a boyfriend or girlfriend, right? Let's say they're a relative or whatever. From what I'm interpreting with this, and I've heard this in the training, so I'm not sure, but you don't have to have both people living in the house, right? The veteran must occupy the house. That's part of the resident requirement. So it must be like their primary, right? But the non-veteran co-borrower is not, they do not have to promise to live in the house. I think that's what it's saying. Of course, I want to make sure. This is actually new information for me. I've been doing a lot of research, and I haven't qualified anyone like this yet, and I haven't checked all the information, but this is what I found in my research, which I think that's actually pretty important, right? Because you might think, what, I do have a vet that wants to buy, they want to buy more than they can, they do have a co-borrower, right, who wants to help, but the co-borrower is not going to be able to move in the house. It's a non-occupying co-borrower. Is that possible? With this part that I read, I believe it is possible, right? And of course, I can do some research to make sure. Now, before I move on to the next slide, does anyone have any questions? Can I see there's another participant here? I'm going to add them real quick. Does anyone have any questions before I move on to the next slide? You can always raise your hand, or you can ask in the chat. Okay, no problem. Moving on to the next slide. Now, this is from LendingTree. Of course, LendingTree is literally just a lead aggregator website where they actually are just trying to generate leads, of course, to sell to people like myself. But they are a known source of information. And I read what they wrote, and I thought it was kind of interesting how they put it together. I've seen a lot of lists like this, but I think LendingTree's version is the cleanest, right? When would you want to use a joint VA loan? It makes sense in several scenarios. Number one, you don't have the income to qualify on your own. If you apply with other eligible military borrowers, they can help you qualify with their income. Again, I know that we were kind of talking about joint loans involving a veteran and a non-veteran non-spouse, like maybe a girlfriend or boyfriend, but a joint loan could also involve multiple military borrowers. So two veterans who aren't married, right? They can come together and they can help you qualify for the amount of house that you want, right? And that would be considered a joint loan. Or you have too much debt to qualify on your own right now. Lenders prefer a debt-to-income ratio of 41%, which is, of course, pretty much across the board. Sometimes they make exceptions. All your debts count towards this ratio, of course, but if you apply with another eligible military borrower, then with less debt or higher income, that could bring down your DTI, right? Which is pretty much the same thing as what the first line is, but this is a little bit more detailed as to how. Now, the third one is actually interesting. Your VA entitlement is used on another home. If your current home has a VA loan and you need to buy a new home before selling it, your entitlement will be reduced or eliminated. If you have a partial entitlement, meaning you have some left, borrowing with another military borrower who has a full entitlement will ensure more of the home is guaranteed by the VA. So that has a benefit right there. Okay. And then you want to purchase a multifamily home with more than 4 units. So this is another interesting thing because, of course, 4 units is pretty much the max you can purchase with the VA loan. But with 2 military VA loan co-borrowers, you actually upgrade that to a larger unit, multifamily home, right? In this example, it says that you can have 2 military borrowers who can purchase a 6-unit property with 1 business unit. Basically, it's like splitting 3-unit properties. Okay, so that's another interesting reason why you might want to consider a joint loan. And again, I haven't done a loan or structured a loan like this, so I'll have to check the guidelines and everything like that. But to me, that sounds like an interesting thing to explore. Right. So again, joint loans is not just about having a non-spouse, but a girlfriend or boyfriend added to the loan. It's also about having almost like a partnership with another military borrower. Right. So does anyone have any questions on that? Look, this is another participant. I'm going to add them in real quick. So does anyone have any questions on that? There's a Q&A portion too. Nope, no questions. Okay. So that's really all I have, because I mean, we're kind of you again. Loan does require different types of financial structures. It's splitting things, and if you have a non-military co-borrower, then they would have to put a down payment. They would have to pay part of the guarantee. So we have a thing in our group we don't like to do public math. So I'm not gonna do public math, but I can kind of give you some I guess general numbers. The VA guarantees 25% of the loan. The non co-borrower would have to split, and the non veteran or non-military co-borrower would have to split that and pay 12.5% down towards the house. Okay, and they would also have to pay their portion of the funding fee. Okay, even if the veteran side is exempt, the non-veteran or non-military co-borrower would still have to pay their portion of the funding fee. Okay, again, when's a good time to use the VA loan? Because of lack of income, you need more income. You have your entitlement. You don't have your full entitlement. You have a portion of it. You want to have another veteran who also has entitlement. You can combine forces, and of course, you want to buy multi-family home units or multi-family units that are more than 4 units. That's another cool reason why you would want to use the VA loan. So I'm going to wait again to see if there's any questions. No questions. And Q&A. All right. So the VA home loan is a loan other buyers can only dream of obtaining. You've earned this right by serving our great nation, and it's my job to facilitate your dream of home ownership. And of course, I want to thank you guys, you veterans, for your service, and anyone who helps support veterans in their goals in order to purchase a home. If you have any questions, you always call or text me or email me, Larry Lee, 832-606-2193. And my email address is lle@vandyckmortgage.com. And you can go to larrylee.com I actually have like a sort of like a landing page with my most popular YouTube videos and classes and links to groups there. And if you forget everything, you always Google Larry the Mortgage Guy. You'll probably find me, especially if it's Larry the Mortgage Guy in Dallas, Texas, or in Texas, right? But I really appreciate you guys being on this call. Now, of course, if you have any questions and you're not able to ask them now or whatever, you can always reach out to me, and it might actually lead me to my next class. So I appreciate any kind of feedback or any questions, and obviously any opportunities to serve you in your business or serve you as a veteran in your home purchasing journey. Again, I really appreciate you guys watching. This is Larry, the Mortgage Guy, certified veteran mortgage advisor. I'm out.